Guys, good morning. Happy Friday. Okay, let's go over here just a minute. Let me find. Here we are. Okay. Let's see here. Okay, so here we are. These are the daily bar charts of the four primary U.S. trading indices, and we have another potential buying tail. You have some two-sided trade in here. Now, what has followed this relentlessly since the end of October, following anything resembling two-sided trade, is immediately higher highs. We'll see. It's clear at the moment the Russell is lagging and the Dow is a bit behind, and as is typical, you have the NASDAQ leading and the ES not far behind. The little boxes you see, the little targets you see, are the rough upside extremes based on an average true range calculation. It's a guideline. That's all it is. We go over here. You can see this is the auction for the day so far, right in here. Get my so here's the present Globex auction. You can see it's tight. The takeaway from this is, if you look at the other days, this is a really narrow range. The odds are overwhelming. We will see extension above or below the structure that has formed so far. And then, if we begin to trade lower, let's do this. You'll get into areas. Let me just do this. So now this is your downside level, really, from about here to here. And I realize that's a really broad level, but it is what it is, guys. You don't really get concerned about anything huge developing to the downside unless you start to trade below about 33.19. That's sort of where we are. I'm going to capture this. I'll post this in the room, in the client portal. So we'll see what happens. Captain, you say crude and the energies are tanking. Does that include natural gas? I'll take a look at it in just a minute. apparently you didn't hear before. So we're getting range expansion. If you really need to see a trade and a close below about 33.19 before you can get overly excited about a potential top in place. If we do start to trade below 33.19, then it does open up yesterday's lows and this downside key reference area that's in here. So we'll monitor that during the day. Guys, okay, in the interest of balance and full disclosure and and displaying the realities of trading, I highlighted a trade, a lean hog trade yesterday for you guys. And, I prefaced it by saying, never know if it's going to work out or not. Well, the trade was stopped out this morning on a wide range down day. So this is a reality of trading. You get in trades, you manage the trades, and then what happens. But yesterday we had a pretty nice gain in this trade. I was very excited about the prospects for it. Well, it just, under our trading rules, we're out. So, but this is a reality of trading. It's not always profits, and it can be extremely difficult when you're in a good trade to follow your rules, especially when you have a short-term profit in that trade. So, just again, in the order of balance and showing the realities of trading, which I'm always going to do. The trade that I highlighted yesterday for you has been stopped out. Guys, gold continues to plow ahead here. It's taken out the spike high we made on the 21st. So there's really nothing between here and that pivot, that selling tail high up there. I had been thinking, and I've shared this with you guys, that I thought that, we could be putting in an important low in gold. And we have that buying tail that's held now, the buying tail from the 14th. And then we formed a balance area. Now we appear to be breaking initiatively higher. So, I'd be favoring longs in gold, and I sure would not be shorting gold. Okay. Torrid downtrend intraday at the moment. Order flow is pointing straight down. The huge mistake, the biggest mistake day traders make, is to try to fade trends, those rare trends that occur in the ES, the stock index futures. So don't do that. Now, what we have on the screen here, and we have some new people, is a guide. Now, this is telling me this information down. The histogram here is the difference between moving average and price. There's nothing magic to it, but it can sort of, be a guide to momentum. So typically what you get in these strong downtrends, you'll see something like this. Let me get, like over here, okay? You'll see this, like this. So this could be setting up something like this short term. Now, this is, to me, this is a better money management tool than it is perhaps an order entry tool. If you see a series of lower lows like this, and you see breadth begin, or order flow, beginning to show divergences and make higher lows, then that can give you a clue about money management. And if you are at a larger degree key reference area, and we'll take a look at that in a minute, you can go long, cover your shorts or whatever. But, the general guideline is, and that's why I did the big webinar a week or so ago and talked about this moving average right here. The general guideline is you want to stay on the price side of this moving average. And typically, you know, you'll get trade like this. You don't, you know, you can't rote trade a moving average. You know, any honest, experienced trader will tell you that. But it can be a guideline. It can keep you out of trouble. So, you know, there's no way I'm going to go long just because this market might cross this moving average. Now, if it forms a balance area, then you can take the break above or the break below, and you'll be on the right side. And then you can use this other stuff that we're using as sort of a guide. Now let's look at context, which is always most important. Let me grab that chart. Now, are you guys still hearing me okay? Because I had trouble with my mic earlier this morning. Just want to make sure. Okay, good. Okay, here we go. So this was posted this morning. Now, what we could be doing is setting up the old potential double distribution day. And at some point today, probably, what time is it? It's 10:30. So I wouldn't be overly surprised if we don't establish some sort of a range by 11 o'clock and we stay in that range for the rest of the day. We'll see, obviously, right? I mean, average true range right now is about 20 handles, and this is, let's see, 37 down to 15, 16, so we're 21 handles into this. So 20 to 30 handles is sort of a guideline for average true range. If we go another 10 handles down from here, we're down in here. So we'll see, you know, just a guideline. What is more telling and predictive is that this structure will form balance at some point. We're clearly in a distribution phase now within today's auction, meaning you basically had a range that started up here around 33, what is that, 30, and we're still establishing that range. Yeah, Captain, I agree with you. I've been quite open about I'm biased to the short side in this market because we're so overdue for some. I mean, I can't remember the number of days we've gone without a 1% retracement. The other thing is, look at breadth. I mean, breadth is negative 483, but that's nothing. You know, I'll get excited if I see, now, you know, yesterday, and this actually helped identify yesterday's low. You can go back and listen to the pre-market, the live room vid. But if you get around negative 1500, it's sort of make or break for the market in that time frame. And of course, yesterday we hit negative 1500 and then just went straight up into, you know, new highs in the NASDAQ and Globex. At some point, you'll get real selling that comes in. We have not had anything resembling even short-term capitulation since the beginning of October. But Captain, to your point, somebody, I think Dirk was bringing up the flu virus thing. The higher this market goes without some sort of normal retracement, the more fragile it will become and the more susceptible it will become to exogenous tweets, rumors, news, or actual real events. Guys, all right, here's the day session only chart with the ES and breadth. The reason it's day session only is because breadth is a day session artifact, breadth is NYSE advancing minus declining issues. So to line the chart up consistently, I use day session only for the ES. And it gives us a relative reading on what's going on. Now, yesterday I mentioned that every time in this trend, this bull trend that began, the latest leg of the larger degree bull trend that began at the end of October, every time we reached near this level, this negative 1100 level, and this is basis the 30-minute chart, okay, we formed a price low almost to the tick or within a few minutes. And then we have rapidly, within three, I think maybe at the outside, in one or two instances within 4 days, we've made higher highs. Now, we're having some pushback here today, and something to watch, as we sort of put the pieces together. The question is, are we forming a significant top, or are we still in this relentless uptrend? And, there's no one definitive answer. What will happen will be a series of things that begin to turn the weight of evidence towards, okay, maybe we have indeed put in some sort of significant top. Well, we are trading below a most recent high volume node. That's one sign, but that's happened several times in this decline where you've taken out minor high volume nodes. The other thing, another piece of the puzzle, will be when the market forms these short-term lows, what is, as far as the current bull leg is concerned, quote unquote, a downside extreme, and then price continues much lower. That simply has not happened in this entire trend up from October. We had this period in December, late November, early December, gave an initial signal, okay, maybe it's different this time, but we formed a low on the 2nd, and then by the 6th, which I think was 2 trade days later, we were testing the highs, and then by the 11th, we'd made new highs and we were ramping higher. So to me, the present leg up in this bull trend began back here. And we have a pattern that is set that's been very, very consistent and very, very persistent in terms of how to identify potential short-term lows. Here, let me do this. So here we go. We just draw a cross here. And then you can see in each instance, when we reach this level down here, and you can see my cursor lines up with the price above, we've been almost, well, either at or just really, really with a handle or two within a short-term low. This was a minor exception again. We made this low here, and then the next day we gapped down, but then immediately bungee jumped back and regained the trend. So this was a test. This was a test of the leg to this point. Well, we haven't had anything resembling a test since early December now, so a month and a half. So, the clock is sort of ticking, but again, until we start to see more signs than we have now, you really can't assume a major top is in place and load the boat in any time frame. But, I don't, from a trading, especially day trading perspective, I don't really care as long as we get rotation like this. you can do really, really well if you're patient and you recognize this auction process is in effect in all degrees of time. You can do really well. It's when there is just, relentless no rotation that it makes it extremely difficult. Okay, guys, I'm going to show you something here. For your consideration. All right, I talked about do this. I used the example from yesterday where we had the market coming down like this, and then you had the histogram that basically shows the difference between price and moving average. It's sort of a momentum type indicator. And mentioned over here that you might see the same thing. Well, we did right here. So if you are so inclined, what you can do now, you can say, okay, perhaps this is a low. And then if price retraces back down towards this low, you can take a long trade and you have some objective basis for doing so. This worked really, really well yesterday, especially on this test right here. And if you go back and you look in the chat yesterday or listen to the video, I remarked at the time, because I watch both the NASDAQ, the NQ, and the ES at the same time, the NASDAQ was not nearly as deep towards this low as was this, and this offered a great entry. Plus, at this point in time, you had both order flow and breadth that had leveled out, starting to trend higher. So that's the type of thing you're looking for when you're trading. Guys, looks like we're heading into this 3301, 3293 key reference area. Pardon me. Now, market's been extremely vertical, especially for the stock indices. At some point today, if we get down into this area, what you're increasingly alert for is this. Let's say we get down, we trade down in here, more or less in the next hour or so. And if we do one of these numbers, then you're increasingly likely to have this development thing that is inevitably going to occur. Now, it may not be like this. It could also be, oops, hold on. It could also turn out to be like this, where we go straight down into here, and then the range is very narrow. So it could be something like this, or more like this. But in general now, what you're sort of looking for as a rough guideline is for this area up in here to hold. And what is that area? Let's take a look. Let's see. So this 3320, 3324 is an area that, excuse me, pardon me. If we're going to have a really strong down day, we're going to have a double distribution day, you really don't expect the market to get much above this level, 3320, 3324. Hey guys, okay, this is an interesting potential event. We're about to excuse me, we're about to take out the day session low yesterday, and breadth is about, pardon me, is about to take out yesterday's low in breadth as well. And as discussed earlier, that would be something that's different this time. Hey guys. Okay, so we've reached into this key reference area highlighted from this morning. Below there, there's another level here. Now back to the upside, this should hold under any immediate bullish scenario. Now what we could be doing now is, I'm always looking for where the stopping price and then the rotation. So this could be a low around which we do some sort of balance, right? If it's not, then this area is a candidate for it. Now, so keep this in mind, and then let's go over and look at the short-term stuff and how it might fit with what that is, okay? That particular potential roadmap. So we come over here and we see order flow. Now, you didn't go to a new low here in the ES, so this is technically not a divergence, but you can see the ES tested this level and order flow held up really, really well. You also had somewhat of a momentum divergence into this test. So that would suggest that perhaps we're going to do some rotation. If I look on the tick chart here, the next little node is up here around 3307, 3311. So that would be a logical potential target, and it would be where you'd want to see what's going on down here with both breadth and order flow. Remember, you really don't want to be fighting the slope of order flow or breadth. Now, what we've done, let me just highlight this. We've established a downside level on breadth. Now, breadth takes this out. Breadth will, once upon a time anyway, it would occasionally, at least intraday, trade negative 1800, negative 2000, negative 2300. We haven't had that in, I don't know, 6, 7, 8 months. So that's hanging out there. That will happen at some point, and each day that passes makes it, sort of puts it on the clock. So this is a level to watch. If you get below this level, you don't want to be playing pick the bottom, okay? Also, order flow now has established a level that we want to watch, and that's right here. Hey guys, sort of make or break right now internally with the indices. Breadth is coming down and it's testing this low. Now, order flow on the other hand is holding up okay. But if this comes out in breadth heading into the close on a weekend when there seems to be some concern about exogenous events, we could get some accelerated selling in here. We're not getting a whole lot of pushback away from this level in here, and we're currently trading at about 32.98 to give you some perspective. Let's see, let me expand this here. This is a little bit better. So, if the low in breadth comes out, it definitely opens up this area in here, 3287, 3281. Okay, guys, we have certainly opened up the door for that washout type of day. And there seems to be momentum actually building here to the downside. And what I'm measuring that is breadth. Breadth is contracting. Breadth is now negative 1300 and sort of drifting lower. Now, breadth can go a lot lower than this by the close. So the downside here is wide open. And if you look on the daily charts here, because this market has been so extraordinarily vertical, there are minor high volume nodes stair stepping all the way down. I think that just best guess is this 3260 level could come into play during this decline. I'm not talking about necessarily today, but this 3260 level is important because it's the level we formed a short-term high, then we built some balance, and then we had that Globex event that didn't show up on the daily charts because it happened in Globex, and then we had the breakout above this level. So we may be on our way to test that level to the downside. You know, I'll have a full report on this over the weekend, incidentally, so I'll cover that from all angles. The other thing that was kind of fascinating is that yesterday, you know, we had the decline, and then the Nasdaq made a new closing high, and it was unaccompanied by any of the other indices. Let's see, let me find. Where is, can't find the chart I want to show you. Here we go. Okay, here you go. Now, I remarked the other day about how remarkable it was that we had just a real dearth of anything in this area regarding the market, you know, breadth contracting to typical levels for bull trend, bear trend, whatever. Well, we're finally getting a little decline. Now, if this market does reach negative 2000, that negative 2000 area by the end of today, it will be hugely informational, and we'll be able to construct an if-then scenario. And likely what will happen, if that happens, is that we will be close time-wise to another important low. So that's something we can look forward to this afternoon. I'd really like to see that because it sort of will clear the air a little bit. Okay, guys, we have a little test here. Now you can see on the way down, we form these little volume nodes, right? Here's one, and then here's one. Now, each one of these has failed so far. So this is a test now. If this one doesn't fail and we take out this high, then you know you got to watch out for some sort of deeper retracement than we've had since, you know, over here around 12:45 or so Eastern time. But now it looks like it's going to fail, so we'll see. Okay, guys, you can see we're starting to get some rotation back up, which is typical, right? I mean, this was, yeah, you don't get too many stock index future 30-minute periods, and that's what these letters are, 30-minute periods that are this vertical without this rotation. So my guess is we're going to do that rotation. Now, how deeply we go now back up into this, you don't know, but wouldn't be surprised if we don't go deeper than we have. So this was not really unexpected, and it's sort of a lesson in, when you get vertical and vertical and vertical, you've got to watch out for that inevitable face ripping rally. And maybe over here, one of the tells was order flow was starting to show some strength. Breadth leveled out and started sloping higher. So, that's sort of the way you want to try and think in terms of how to put these pieces together. Hey guys, I have been writing reports for several weeks about the verticality. Now, what we're looking at here, this is a quarterly profile view of the ES. Each letter, each slot is 1 week. I'm going to split this out. I'm going to split this out. And what we've had since the end of October is this extraordinary run with very little rotation or balance. And this gets back to the concept that auction markets follow the same development processes in all degrees of time all the time. So in all degrees of time, they will eventually spend more time going net nowhere than they will trending directionally. So it's unusual for the stock market to trade as directionally as this one has without rotation. And you can sort of eyeball that if you go back and you look at other quarterly time periods. I mean, this was a very extraordinarily narrow auction in terms of the overlap, and you can see that transitioned into further gains, but you can see what followed it was a structure that was heavily rotational, and that's typically what happens when you have this period of verticality in a given time frame. What tends to follow it almost always in the next equivalent time frame is a more heavily rotational market, and I don't think you can find an exception to that if you go back and you look. I'm going back all the way now into 2017 into 2016, and you can see how rotation dominates this time frame. Now, rotation dominates most time frames, but this one in particular. So for quite a while, I've been suggesting that the market would, with certainty, at some point, begin to become more rotational. And it's possible that process has begun. In this, you can sort of go down, stair step down the time frame in this from weekly to daily. I mean, on daily, it's been extraordinarily vertical. But if we're now entering a period where this structure begins to balance itself out, more of this range begins to be probed, then it's not unreasonable to expect that maybe the rate of change, even if we go higher, is going to slow down. And then the market begins to be dominated by more rotation, something like maybe this, or maybe even this. And we could, and that includes plenty of room for higher highs, but still heavily dominated by rotation. So as a trader, I think this is what you're looking for. And I think there's a probability that you can sort of build a trade model around this expectation. And Captain talked about this yesterday in a response to Dirk. You sort of, in your mind, you have a bigger thesis about what's going to happen. And so you have a base thesis, and then within that thesis, you become more granular with your trade strategy and then your trade tactics. But my thesis, of course, I've been early because that's been my thesis for a couple of weeks or more, that we were going to have this more rotational type of market here. Hey guys, something else. Now Brett's is way off its lows. The low reached is about a little bit above negative 1600. Let's say negative 1600, round it off. And that's intraday. I won't believe that a potentially important swing low is in place until I see something on a closing basis of around negative 2000. So if we close today anywhere close to the level we are now, which is about negative 1300 or higher, to me, that just, it doesn't mean that we won't go right back up and make higher highs, but it still leaves it hanging out there that maybe the most important swing low is in front of us. Now that swing low could come from a whole lot higher level. I admit that, I grant that, but this is nowhere close so far today to extreme. Now we have 45 minutes, maybe the thing's going to collapse, but at the moment it looks like it's we're more likely to go up and close unchanged for the day. I'm sure that would make Captain happy. Okay, guys. Interesting day, aren't they all? I'm going to shut it down. I'll have a report out by Sunday evening, and we'll pick it up again. You guys have a super weekend. I'll see you Monday.